All right, good morning, everyone. Good morning. Welcome to Credit is King. We have Anthony Rosa, who is a financial coach, advisor extraordinaire. He's gonna teach you guys all the ins and outs of credits, tips and tricks that you can use to improve your credit score, how to negotiate credit, benefits of using an EIN when you're doing your taxes versus your social, all of that stuff that I have no idea, so I'm gonna be paying attention on this class as well. If you guys have any questions in Zoom land, feel free to unmute yourself at the end or pop it in the chat as we go along. Take it away.
Awesome. So thank you so much. Thanks for coming, giving me your time, talk about credit today. My name is Anthony Rosa. Thank you, Amanda, for having me and inviting me.
Of course.
Thank you for the office to kind of give us the space. For me, I think that credit is something that is like the biggest myth, right? If you don't have the opportunity to go to school for business management or take accounting courses, or if you're not a banker, so to say, with that type of experience, there might be some hidden elements. All right, so I want you to write that down. Note takers are money makers, and I think that it's really important that the things that I'm going to say today that you can watch on the replay, but for those that are watching live, it's important to take notes. I highly recommend it for yourselves, for your family, and for the clients that you deal with. For me, my goal today is to teach you how to fish, not just give you a fish. I want to teach you about the credit factors, talk about these credit myths, these hidden elements people don't understand normally. And a little bit of background about myself. I used to be a banker with Wells Fargo and PNC, and I started in an in-store in ShopRite in Hackensack. And my background, I studied business management. I held some leadership roles in my undergrad. I'm alumni of St. Peter's. And there I had the opportunity to kind of, during my studies, start to learn a little bit more about accounting and taxes and tax preparation. And so in 2006, 2007, this is kind of when I started to mold myself learning about credit in America, because credit systems all around the world are all different, let alone in this country, it's confusing enough. So my background as a banker, I quickly excelled. I did not have a banker hat. I grew up in an inner city in a single parent background. And because we grew up in what you would consider a low income household, we were able to continue my education, and I'm an EOF student. So EOF is funds for those that grew up in a low income household to continue education. And so if it wasn't for sports and programs that support low income households, I probably wouldn't be here today. So thank you for those programs. And so as I'm sharing my background, I want you to understand that I don't have this cookie cutter background. I was an average student, but I was a student athlete. And I think that as a student athlete, the competitiveness in me, I would never be able to settle for less. And I think that with the mindset of credit, because people don't understand, they just don't want to do it, so they settle for less. And so I'm hoping that today I can inspire, connect, and educate you on how to think of money and credit like you think of air. You just don't think about it. Today we're going to talk about budget plans, forecasting and projecting. We're going to talk about cash flow cycles. We're going to talk about credit strategies. So remember, note takers are money makers. When I was a banker in the in-store, I was a personal banker. But because I had the background of understanding the benefits of having a home-based business, or the benefits of understanding that I get the same deductions as a regular brick and mortar. So what does that mean? The deductions that McDonald's has, the deductions that all these other Nike has, these stores. Me working from home, I have the same write-offs as them. And so it's something that we have to continue to look for more information on. So even after today's not going to be the end all be all. I think that I'm going to leave you with some challenging thoughts. And these challenging thoughts, I'm hoping that you can continue to do your own continued education. but there are ways to contact me, and I'm gonna be an open book today for you all. So I was a business specialist in 11 months. I got promoted because I was just opening up business accounts. And really the way that I was doing it is I was having a conversation and masterminding with my clients. And I was telling you, hey, are there other ways that you can generate income? But are there any expenses from these side businesses that you're doing that could possibly lower the taxes that you're paying back? Because the higher the income as a self-employed person, as most of you are, as 1099, when you do your taxes and you don't have enough expenses, then guess what? You're gonna pay a significant amount of taxes. Now, who here really likes to pay a lot of taxes? Not me. So when I got promoted to a business specialist, because I was opening up these business accounts and I was teaching people about 1099 versus W-2 and the benefits of it, I loved what I was doing. And it became a passion project. So for me, as a title, I'm a financial coach, because my sports background, that athletic background, I believe in having a coach. I can't do it for you, but I can teach you the steps. And I can help you understand and recognize that the things that you're doing are preventing you from the goal. I call that self-sabotage. You probably want to write that down. Self-sabotage is thinking, doing things that are not going to help me get close to my goals. And the hidden element about credit is sometimes people can have a 700 credit score and they think it's good credit. You have one credit account, you have a low credit limit, and the age of your credit is less than 3 years, but you have a 700 credit score. What I'm here to tell you is that do not focus on the credit score. Now, it's crazy in real estate, we kind of have to focus on the credit score. I get that. But I want the individual to understand that there are credit factors, and these credit factors create our credit score. And understanding these credit factors, I'm able to manage a high credit worthiness profile. So if I manage the credit factors and I manage my profile, then naturally my score will be high. So as a business specialist, what I was doing with my clients is I was doing budget plans with my clients. I was looking at the credit report with them when as a banker, I wasn't really supposed to. My job as a banker was, if you were to get declined, I'm giving you an adverse action notice, and that's the only thing that I'm supposed to be doing. We're not allowed to teach you about what's going on your credit. And so for me, I thought it was very important to scrub the credit report. Now, who knows the names of the 3 credit reports? Can you help her out? Perfect. That's exactly why we're here. And if anybody that's watching us behind, if you have any questions or comments, please put them in the chat, and I would love to address them during the meeting. So it's Experian. There you go. Write that down. EXPERIAN. TransUnion and Equifax. Now, did you know that there are other third-party consumer reporting agencies called Innovis or LexisNexis? These are third-party consumer reporting agencies that sometimes have our information. And did you know that none of these companies communicate with one another? None of these companies communicate with. So what we're talking about is we're understanding the credit reporting agencies. We're understanding that it's important to be able to monitor and look at them directly. If you don't have a direct access to the credit bureaus, how else will you know if something's happening and you didn't catch it? So today, what we want to talk about, for those that are not here, You probably want to come over, grab one of these brochures. I'm going to leave a couple of them, but we're going to go and do a deep dive. And today what we're going to talk about is building credit, negotiating credit, and the benefits of filing your taxes. So when I was with Wells Fargo, I was promoted as a business banker with PNC. There, I was managing the $1 to $5 million space, a business owner in all types of industries, whether it was real estate, logistics, retail, hospitality. I was managing these accounts. I had a $128 million portfolio based off of lending and based off of deposits. I had a large territory. I loved what I was doing because I was able to really get into the community. Now I wasn't a traditional banker in a branch. I was a banker that I can come out. I can set up events. I can get people together. I'm dealing with a higher, threshold of clients that have higher needs, and higher, I mean in the dollar amount. So now it starts to expose you to reviewing credit reports, reviewing tax returns, setting up a credit memo to the underwriter. Why? Explaining in detail that this is a good deal that the bank should lend. Now imagine that, right? Some loan officers on the mortgage side, they do rapid rescores, right? If something was to change, or we were able to lower a balance, or if I was able to get a collection removed, we can do an assessment on that and do a reevaluation, a rapid rescore, and then they use that new score. So for me as a business banker, it was a passion project. And this is where this all came. So the name of the company is called Fresh Start Advancement. Now you understand who I am, what I do, how long I've been doing it. I've been practicing coaching since 2015. So this December will hit 8 years. I've had the opportunity to coach nationwide over 5,000 individuals. I've scrubbed over 90,000 credit reporting pages myself. And because of debt management and debt negotiation, I saved nationwide over $1 million in debt for Americans. I've averaged that for the last 5 years. So I have the best feeling in the world. I feel like it's the best job. I don't even think of this as a job, because I'm teaching people how to think and differently towards managing their money and credit. So the name of the company is Fresh Start Advancement, and I want to give you a fresh start to advance. So let's jump right into it. If you open this up to the first page, and again, those that are not here, I'm going to explain in detail what we're looking at here, so you'll be able to fit right in. We're talking about credit factors and what are the keys to having good credit. So can I have your name again, please?
Ariana.
Ariana. May I have your name, please?
Moira.
Moira. Okay, gentlemen, sir.
Ryan.
Ryan, nice to meet you, Ryan.
Nice to meet you.
Please help yourself if you want to grab.
Oh, perfect. Thanks.
Okay. Can you tell me what is the #1 reason why people damage their credit? And Ryan, please jump in as well. We're all here together. Late payments. Do you know that with late payments, it's mostly not because the person didn't have the money, it's mostly because they forgot to make the payment. So I want you to write this down. What is the difference between the due date and the cycle closing date on a credit card statement? Anybody? What is the difference between a due date? You have a Capital One credit card, it's due on the 25th. Your cycle closing date is an important date on that bill. What is the difference between the due date and the cycle closing date? Anybody want to take a shot? Right?
Isn't that the cycle closing date when it gets reported to the bureau?
When it gets reported to the bureau. So the second reason why people damage their credit is because they're maintaining a high balance. Maintaining a high balance creates 30% of the credit score. If you think about a pie of 100%, 30% is just on balance already. But we found out that the number one reason why people damage their credit is because of late payments. How much do you think the percentage of late payments makes on the credit score? Anybody? It's the number one reason why people damage their credit. 35%. So what are we talking about? We're talking about the keys on having good credit, right? DJ Khaled, like the keys. These are the keys to having good credit. And so if balance owed and your payment history create 65% of the score, then paying late and keeping a high balance, you're going to keep a low score just by doing that. Now, there's laws that protect us, the Fair Credit Reporting Act, that if there's information in debt that's paid late, we can challenge that. So on the credit report, if there's negative information, we could challenge that. So what I do in my program is I challenge negative information, such as an account that's closed with a balance charged off, a collection account, name variations. Name variations, addresses, and phone numbers don't have a credit score impact. But me as the underwriter, I want to make sure that I don't have multiple name variations and all these addresses and phone numbers. This isn't me. So there's 5 C's of credit and there's credit factors. They're different. We're probably not going to get too detailed into all of them, but I'm trying to explain to you that in one of the C's of credit is character. Character is very important to understand. Character also is your employment history, what position you have. These are the keys to having good credit. So if you are self-employed or if you're a manager, you want to make sure that your credit report has your updated employment history. And if there's a position available in the application that you're filling out, you want to make sure that you're filling out the applications correctly. Because you're giving the underwriter a peace of mind that understands that you're not just a customer service rep, you're the district manager. So if you have a title or a role in character of credit, you want to make sure that you're filling out those applications. So when we're talking about the keys to credit and we're talking about the credit makeup, we understand. Now, what's the solution? What do you think the solution would be for someone that kind of carries a high balance or is forgetful and they pay late? What do you think is a solution? What would you tell your client that's trying to buy a home and they're like, I don't have the down payment? What are you going to say to them? Anything. What would you guys, encourage them to do? How are you going to help them?
Increase their income.
Okay, that's an option. It's a good one. What else?
Auto pay.
Auto pay, right? One of the easiest things that you can do if you're forgetful is just setting up auto pay, right? You can set up an automatic payment for the minimum payment. The minimum payment will come on the due date. But why was I talking about the cycle closing date? Because if you keep a balance over 30%, it's automatically going to put you in a yellow area. If you keep it up 50 to 70%, it's in that 90% range. It's going to be in a red area. I'm giving you colors to kind of understand. Now, in the cycle closing date of the bill, if my due date is the 25th, but my cycle closed the 29th, and my balance went up after I made the minimum payment, will my credit score go up, down, or stay the same? What do you think? If my due date is the 25th, and my cycle closing date is the 29th, and my balance goes up, will my score stay the same? Will it go up, or will it go down? What do you think? Down. Now you say to me, well, Anthony, I made the payment, I should be good until next month, right? Wrong. Because if you use that card again in between those days that the cycle closed and that balance goes up, well, we just learned that 30% of the credit score is balance owed, so your score will naturally go down. Just like that. So if someone's like a 640 credit score, and you look at their credit card, the credit report, and they have like 7 accounts with balances, one of the derogatory remarks might say, too many accounts with a balance. Have you seen that before when you're running the credit? Have you guys ever seen a credit report before? Okay, probably the next time that I come, I have thousands of pages of credit reports. Next time I'm gonna bring some credit reports, okay? So, to hold myself accountable on time. So, credit, we understand, is very sensitive. What do you think is rule of thumb, rock star status, the percentage of the balance owed should be by the cycle closing date? What do you think? Hey, zero's cool, but you gotta pay to play a little bit sometimes. So it's okay to keep a balance, but we don't want to keep a 90% balance. We don't want to keep a 35% balance. What is a balance you think proportion to the limit? I have $1,000 limit. What do you think should be my balance? 10 to 15%. 10 to 15% by the cycle closing date should be rock star status. So sometimes if you have a client and you're preparing them, you know, more times than not, you want them to have their pre-approval before you start looking for the house. More times than not. Does that happen all the time? Maybe not, right? But if I'm coaching somebody as their professional that's showing them these homes or apartments, I want to prepare them. Hey, I need to prepare you because I understand that you're looking to buy a home. This is super exciting. I'm happy for you. I love what I do, so you're in good hands. I need you to understand that your credit is important. So let's review some things. When I take on a client, let's say if one of you was to refer me a client, the very first thing that I do is I give them a 15-minute courtesy call. I give them a complimentary review. We're gonna look at experience. So if you don't have an Experian account, I'm gonna ask you to download one now, and we're gonna create an account. And hopefully by the end of the day, you're gonna see your credit report, right? So for those that never seen a credit report, I'm hoping that you can see one today. Cool. We'll get to that in a little bit later. We're talking about just the keys to having good credit. We wanna know what could hurt us, right? What did I lead with? Self-destruction, right? If we don't know certain things and we're going down this path, but we don't know where this path is going to lead us, good, bad, or ugly, if it's a dangerous, we won't know. But if you have the keys and someone gives it to you, then I can put a flashlight and I know where I'm going. So I'm giving you a flashlight, some batteries, some keys. So we know that rockstar status is under 15%, not by the due date, but by the what? Cycle closing date. And so how do I know what the cycle closing date? The only way I'm going to know is by looking at my bill. But what happens if you do electronic banking? Or what if you do automatic payment? The chances are, if you're paperless, you will never see your bill. So when I wake up in the morning, one of the first things that I do is I go on my phone, as most of us do, and before I check Facebook and Instagram, I go on my bank accounts. I verify my transaction history. Every single day for the past 10 years, this is what I do. Why? Because I'm an inner city kid that grew up in a low-income household that probably shouldn't be here. And I don't have a backup plan. I don't have someone that I can rely on and ask for support. The last time I tried to ask family for support, they said no. That was 10 years ago, and it'll never happen again. God willing. So I do these things to make sure that there's no fraudulent activity. I do these things that if I go to the restaurant and I spend $100, that it's $100 that comes out, not 1,000, not 140. But because if I'm not looking at my transaction history and I'm not monitoring my checking account or my credit card, or I'm not monitoring my credit report, how am I going to know when something happens? So the next thing I want you to write down is be proactive. You thought I was going to talk to you about boring stuff today, huh? Be proactive. I'm a mindfulness finance coach. So I talk about triggers. I talk about early warning signals. I talk about how you could recognize certain things that are in our blind spots. Why? Because mental health nowadays in this year, people understand it. I have anxiety. Where does anxiety come from? I got restless leg. I do that too. You know, what is restless leg? Restless leg is a part of anxiety. But where does it come from? It's an early warning signal. It's letting us know something that we're anticipating or expecting for later, but we're thinking about it now. And I do it all the time. Sometimes like I'll have like shaking hands, you know, like these are things. And a lot of the time, all these anxieties and things that we feel come from the stress of money and credit. So we can recognize how not to self-destruct. If we could recognize certain things to do versus certain things not to do, then we'll understand what to do and we'll feel encouraged to do that. You with me? So what I'm trying to do is I'm trying to give you the keys to understand what not to do. Because in credit, if I know what not to do, then at least I can tiptoe around knowing that, okay, don't do this because don't do that. So that's what, making this simple, learn what not to do and you'll be okay. Don't pay late. Set up a budget plan. Let your bills build your credit. Understand the difference between your due date and your cycle closing date. Especially if you're in that like 620, 640, where you're still in that kind of poor phase. For someone that's watching and they're looking for a credit boost, lower your credit balances. Simple. Lower your credit balances. And so one of the things that I wanted to talk about is, as a finance coach, I do have a paid program. It's a 6-month program, but I work one-on-one with the individual. So when you refer me somebody and I do their complimentary credit review, I'm looking at the credit report with them to understand what they need to do. So the first 3 questions that I'm going to ask, and nobody has to answer this, I want you to think about it. When you do a budget plan, do you do a mental budget, a paper budget, or you kind of just pay as you go? Do you do a mental budget, a paper budget, or you kind of just pay as you go? My next question is, when you're at the point of sale, do you use cash, debit, or credit? These are questions that I'm asking. And it's important for you all to know, as professionals with clients that you're dealing with, you kind of want to know their financial habits. Because people are very indecisive, and chances are, if you as the realtor do not have a plan for them, they're going to drive you nuts. Oh, I want to come here. Oh, I don't like that. Oh, I want to come here. Oh, I don't like that. Oh, I want to come here. Oh, I don't like that. Everything that you show me is not what I like. Well, these are houses that you can afford. Based off of your score and your income and your down payment, we need to work on that. Because I know you want the Fresh Prince of Bel-Air house, but right now, this is what you can afford. So we need to do a good job. So when you're at the point of sale, what do you use? Cash, debit, or credit? And it's not credit using your debit card as credit, right? Some of us do that. We're at the point of sale and we're using our debit card. And when we're at the point of sale, they say, how do you want to use it? Oh, as credit. Say, I really have, oh, credit. Thinking that you're using it as credit. But in reality, it's not. It's your debit card. It's just a pinless debit transaction. And as a pinless debit transaction, what's happening is you're only going to lose the credit history. So if you do a mental budget or you pay as you go and you're using cash or debit at the point of sale, let me ask you a question. Are you building history? Are you building credit history? No, we're not. So you're missing the opportunity. You say, well, Anthony, I got a good job. I make $90,000 a year. I'm an electrician. I'm in the union, but I use cash for everything. Okay, great. So when it comes to time, you're 38 years old. You're an infant in the banking eyes. You're a baby. You're a baby. Say that to someone who has $100,000 in the bank, but no credit history. They walk around like they're, I got money in the bank, I got a good job, but you have no credit. What good is that? You're not going to buy a $400,000 house in cash. So there's ways on how to build credit. So let's talk about that. What do you think are the easiest ways on building credit? What kind of lines? Student loans is a trade line. What do you think is another trade line?
I know if you use credit card more, that's how I. think
Credit card.
yeah.
Credit card is a trade line. Auto loan, mortgage, personal loan, line of credit are trade lines, right? What's the difference between secured versus unsecured credit? What do you think? Anybody? You put the money in. So chances are for someone that doesn't have any credit, think of them if they have an ITIN number. Think of them if they're new to the country. Think of them if they're 18 years old. Think of that if they're graduates from college. Think that they just never had a credit card. A secured credit card would be the best bet. Now, there's other ways on how to establish credit as well. Getting yourself added as an authorized user to an existing account. Does anybody know what that means? What does that mean?
So basically, like, your parent, let's just say it's your parents, they have a line of credit, they authorize you, most of the time you even get your own card, but you're still on their account, but it counts towards your score.
Right.
as well.
So, thank you for sharing that. So as an authorized user, you mean to tell me that I have no credit history, I'm 36 years old, I make 150,000, I have no credit. If you put me on your credit card and you have a $15,000 limit, it's from the year 2000, there's 23 years of credit history on it, and you put me on your card, now your credit history goes on my credit report. It's called an authorized user, other known as piggybacking, and it's not illegal. Now you want to have a mix of primary trade lines with authorized user trade lines, absolutely. If you have a whole bunch of authorized users on your credit report and no primary trade lines, the underwriter is not going to go for that. They're like, hey, you're just on these accounts. You don't have primary credit history. So you have to play the game in a sense of understanding credit worthiness. So what is credit worthiness? In my eyes, 5 to 7 trade lines minimum. So if you don't have 5 to 7 trade lines, you don't have enough credit. Another one is you write that down. What's a good amount of trade lines to have? 7. Minimum 7. What's a good credit age? 3 to 5 years. A lot of banks, they won't even give you a personal loan if you don't have at least a minimum of 2 to 3 years average credit age. They won't give it to you. Wells Fargo, M&T Bank, you have to have a minimum age credit history to know that you're credit worthy. And if you don't have that credit age, chances are you're going to need a co-borrower. So if you're buying a home, and like the analogy, you want to buy that Fresh Prince of Bel-Air house, but your income is doing this, the only thing that you can do is either A, try to make more money, or B, get a co-borrower. Hey, you have a co-borrower, you have a relative, a spouse, someone that you live with, that you trust? Is anybody gonna live with you? You're gonna move in? Oh yeah, my brother's gonna be moving in with me. Okay, how's your brother's credit? What's your brother's source of income? What if we add your brother to you and put that both? Now we have combined income. Instead of your 70,000, I can use his 80,000. Now you're at $150,000 in buying power. You see what we just did? Now we just need to make sure that they're eligible. So in our eyes, I don't want to use the word upsell. What we want to do is we want to provide the home that they're looking for at the cost that they want. But it's important for us to understand that as we're shopping them around, I do this all the time. I window shop. I love just going to the mall, looking at these things, looking at it, you know, like, I could buy it, but I don't want to. You know, I put it back. I do it all the time. But then when you're buying a home, you're window shopping. You're going to the house, you're walking up and down, you know, you're probably saying, oh, go sit down, go see how that feels. Can you imagine yourself having breakfast here? You know, like, oh, wow, your kids. Can you envision your dog running around? Take a moment, go, take a moment. And we're just there watching. You think I'm an agent, I'm not an agent. But while we're doing that, we're thinking, oh my God, this is my 9th house I just showed this person. I spent 15 hours looking on the MLS, mapping this out, driving them around, showing, and then they decide, you know what, I'm gonna wait another year. I don't think the market is right. All that time that we spent because we didn't qualify them. But what we're talking about is how to recognize certain things for ourselves and for them. So I'm going to start to ask them, hey, did you get your pre-approval? No, it's in the process. Oh, okay. Tell me more. Right? We're not going to say, hey, come back to me when you get your pre-approval, because we might not have a good pipeline. Okay, let me help you. Are you working with a loan officer? No? Oh, we have one in-house. Look, don't worry about it. We have everybody here. We have the title, we have the loan officer, we have us, we got strong presence. You're good hands. Okay, now that part is done, we got to get into this. Okay, hey, listen, how's your credit? How's your income? Do you have a down payment ready? Yes, I do. How much is your down payment? 5,000? That's not enough. What do you mean? I heard there's programs like down payment assistance. Yeah, well, there's FHA. Some cities will give you, a stipend for like down payment. Maybe we can negotiate a seller's concession to cover closing costs, but that doesn't always happen. I know you want to buy. Let's work on it. Let's give ourselves a plan. How's your credit? And that's the step one, because if they don't have the approval and you're spending time with them, oh, you have a good job, they look clean cut. I don't know why I did that. I don't know if I look clean, but they look clean cut, and then you're kind of in your mind, okay, they're good. They have good credit. I don't think they have bad credit. And you're like thinking like this to yourself, because as the realtor, that's not where our mind is all the time, right? We're just thinking about the needs, matching the needs, putting it together, period. Now you mean to tell me I got to do this and I got to do that? But that's not my job. That's the loan officer's job. Right there, when you do that, you just shot yourself in the foot. Don't delegate to someone else, oh, that's not my job. No, I want to encourage you to recognize what are the type of conversations that should be had. And if these are things that you personally don't know anything about, those that are here and watching, then I would love to set up a complimentary review with you. We can spend a little bit more time. So we're talking about building credit. We understand now there's a difference between secured credit and unsecured credit, right? We understand that if we're not eligible at a certain threshold, we might either A, get a side hustle, or B, get a co-borrower. So we understand now how to help them become eligible. We understand the certain conversations that we have to have in the beginning. Hey, did you get your pre-approval? Yeah, I got my pre-approval. Oh, okay, great. Send me your pre-approval. Oh, wow, you got a pre-approval, 420. Good to go, baby. Now, during this time, do not pay late. Do not keep a high balance. In fact, stop using your credit cards. Just don't even use them at all. Pay everything down to zero and just use cash during the next 45 days that we're looking. I don't want you to mess this up. You understand? Don't mess this up, because you're in an opportunity right now that many people want to be in. You have the pre-approval, you have the credit, we're looking for the home. Don't mess this up. Do you know how many people that I've had, the husband, they're getting, a married couple, they're about to buy a house. The husband, limited English, limited credit knowledge, thinks he's okay, runs a successful business, money in the bank, all that good stuff. In the process of buying the home, he goes and gets a Mercedes-Benz for $68,000. New loan on the credit report. That just lowered his buying power, but he didn't know. So you have to tell them, while you're in this process, don't apply for anything. Not only don't use your credit, but don't even apply for credit. And before you even think about doing something, I need you to call me. Don't do it, because it's a waste of your time and my time. And also, I'm gonna set the improper expectations if I don't tell you this. And I think that there's a lot of agents, but there's hidden elements that agents don't do, whether they just don't know or they're in the middle of the fire and the hustle and the bustle. So we spend a lot of time on building credit, but I went in different angles to understand the factors, the 5 C's, secured versus unsecured, how to impact yourself, self-sabotage. We're getting into it, right? Credit to me is a mindset. As a coach, you got to teach about this mindset. What is this mindset I'm talking about? It's a winning mindset. So you have to have a winning mindset. And in order to have a winning mindset, you have to be proactive. How to be proactive? I shared that in the morning. Look at your statements. Look at your credit report. Verify your balances. That's how you be proactive. Okay? So the next one is negotiating credit. Before I do that, does anybody have any questions to what I was saying? Like before we go into this next point.
So how can you find your cycle closing date?
Excellent question. On the bill, typically on the top in the middle, they have a cycle closing date. It'll say this billing cycle opened January 21st, ended January 31st. On the bill. On the bill, when you look at the bill, there's a billing cycle. And then in that billing cycle, you'll see the open and the close on the billing cycle. You just have to read through the billing cycle and look for it. Where does it say? Where does it say?
So I have it paperless, so can I just go on the app and look at the statements?
Bingo. Bingo. For someone who doesn't go and get paper, that's why I have to monitor it, because I go into my online banking, I go into my statements and I verify it. Because if I don't know, I don't want to be reactive. Oh, wow, there was an inquiry from Macy's, drop my credit score. There was an account from Fingerhut that I don't even know who this is, and now it's in collections for $100. If we don't see these things, we will know.
So do I need to keep the balance low during the cycle closing date?
So you need to keep the balance under 15% of the total limit by the cycle closing date. So for example, if my due date was the 25th, and I gotta make a minimum payment of $25, I make the minimum payment. Cool. But the 29th is my cycle closing date. My balance is $200. The limit is $1,000. I can choose to pay $50 by the 29th on top of the $25 payment I just made. So I made the minimum payment to satisfy the minimum payment, but I'm making an additional minimum payment because I want to lower my balance. So in all, I'm making multiple payments during the month. Yeah, multiple payments.
And is it okay, sorry for what is it okay if I keep it like 0? Because my goal is to keep it 0 during the closing date.
Sure, just pay it in full, whatever you use by the due date. But you got to be mindful. If your due date is different from your cycle closing date, and you pay it off by the due date, but there's a couple of days between the due date and the cycle closing date, and your balance goes up again, then your score could go down. So I don't want you, or those that are watching, to be afraid of using credit. No. If you know what the due date and the cycle closing dates are, then you feel encouraged and empowered that, oh, by the 29th, I just have to keep my balance low. I already satisfied my minimum payment, but after the 29th, say the 30th, I'm gonna max out my credit card. I'm gonna go put a vacation to Kalahari on my credit card. Max it out. But I'm gonna make my payment by the 25th, the minimum, and then I'm gonna keep that balance again, make another payment before the 29th, because I want to manage a low utilization. Very, very detailed right there. And that could be that right there could be the difference between an average good score, right? And that average and good score. If you're at a 640, 660, and you want to get to 680, 700, there are certain things. I don't focus on score, but I know that the content that's reporting, if I'm able to manage that, then I'll get the score that I want. I'll get the score. So does that answer your question a little bit better? Awesome. Any more questions before I go into the second part?
About I do use bank apps. So I never really, there is a section that asks for employment. I never, ever give out any details. Ever.
Absolutely.
Is it okay if I?
No, I would fill it out. And I'll tell you why. Let's say, there's a question there that talks about income and rent or mortgage. So if you don't have the employment status or the history, and you're not putting a fair or accurate annual income, then the underwriter can decline the application right away, automatically, before they even get into manual review. Because the income doesn't meet the minimum threshold. So when they run your score and they're running an inquiry, they're gonna deny you right away. So if you don't have that income or that employment status, I think it's very important from a banker's eyes. So you mean to tell me that you want me to extend you credit, not you personally, but you credit, and you're not working? But you say, wait, Anthony, no, I'm working, I have a job. Well, on this application, I don't see anything. And more times than not, they're not gonna call you. They're like, hey, I saw that you filled out an application, but you didn't have employment history here. Most times, they're not gonna call you. So you might miss out on opportunity. Does that help? Excellent questions, thank you. So negotiating credit. I won't spend too much time on this, but there's certain laws about debt. And they have to be accurate, and they have to be fair, and it has to report to all 3 credit bureaus. So if there's a debt that's in collections and it's not reporting to all 3 credit bureaus, that's not fair and accurate. So I would dispute that. I would challenge that. I would request information to support the collection agency can in fact collect on that debt. And one of the things that I want to find out is, are they the owners of the debt or are they collecting on behalf? So these are for people that have charge-offs, collections, judgments. They're on the verge of a bankruptcy. These are people that have these marks on their credit because they stopped paying their bills. Whether it was hardship or whether it was lack of discipline. In the creditor's eyes, all excuses are equal. Granted, during COVID, there was a whole new COVID dispute reason about COVID, and it was a tough time. Even lenders were allowing you to put forbearances on your mortgage and taking your mortgage, putting it on the back end, and the lenders and the banks knew that we were going through a tough time, so they were trying to figure out, because I think that because of how hard it is to build your score and how easy it is to damage your score, COVID hurt a lot of people because of late payment history. And if you have an account for 10, 15 years and you pay late one time, that whole account is now a derogatory remark. It completely changes how that account from Capital One 1999 looks on your credit report because of one late payment. So you have to be very careful. And it's not like back in the day where you would request, oh, can you forgive me? Can you reverse this? Can you do a goodwill adjustment? It's not like how it was back in the day. All these 609 letters and people saying, don't pay your collections. I can get your late payments off. That's all BS. They're just trying to get your money. Because 6 months and they try to dispute and that doesn't come off and they didn't work on building your credit. So now you still have that account. You didn't learn from the process and you didn't build your credit. You just paid this person just to send letters. I am not Lexington Law. I don't just send letters, as you can hear how I'm going about it. So when you're doing debt negotiation, you're right. I don't just pay them. No way. Just yesterday, Harvard Collection Service was collecting on behalf of Con Edison $1,900 for my client. When I'm calling them, my client authorizes me to speak on behalf, so I don't get a power of attorney. They're on the line with me. I speak directly. I start asking them questions, and I'm listening to how they're responding, and I'm like, wait, I'm uncomfortable. I told her, my client, don't give them any more information. I asked them specifically, are you guys the owners of the debt? Are you collecting on behalf? Or are you a collection? Are you a credit repair service? She hung up the phone on me. I was like, oh my God. So what, in that manner, we have to open up a dispute. We have to tell these credit bureau agencies, like, look, we called them, we try to verify. I don't know what this debt is coming from. Now I have to go to the original creditor. So now I go from Harvard, now I go to Con Edison. Mind you, I already submitted the disputes. So I challenged it. I opened up a dispute. My goal is to get it off the credit report. That's my goal, right? The fastest way to improve your score is lowering your balance or deleting a derogatory item. Those are the two fastest ways. Okay, these are gems. Write that down. And so now I'm like, wait, I don't feel comfortable with the collection agency. I have my dispute pending. Now I'm going to go to Con Edison. Con Edison. Hey, I'm here with such and such. My name is Anthony. I'm authorized to speak on behalf. I'm following up with an account that's in collections. Can you verify this? Can you give me the open close date? Can you give me the balance? Can you give me the reference number? Can you give me the account number? Who's collecting on behalf? Can you confirm that? Can you send me a validation of debt? I'm asking all this from the collection agency and the original creditor. And if they can't match the information, then it's not fair and accurate. So that's when people say, don't pay collection agencies. I get it. Yeah, that's probably the only reason. If they cannot validate it. How do they validate it? They need your social, they need your date of birth, they need your full name, they need your address. They need those 4 components. And if they don't have it, it's not fair or accurate or complete. And if it's not fair or accurate or complete by the Fair Credit Reporting Act, they do not have permissible purpose to report on the credit report. So now we're dancing, right? If it's boxing, this is exactly, I'm boxing with the credit reporting agencies, I'm boxing with the collection agency, I'm boxing with the original creditor, and then my client is outside the ropes, just watching, and I'm the one there taking it all in. And I do that because my program, I want you to see me do until you feel encouraged and empowered to you do. That's just how I do it. For 5,000 members in my program since 2015, scrubbing 90,000 credit reporting pages, saving on average $1 million per year in debt management, I do it because you see me do, and then I see you do. That's how I coach. Each call is 45 minutes. We have one mandatory call once a month. So I'm able to just spend 1 hour with you once a month with multiple touches in between. Those multiple touches can be like, hey, did you get this letter in the mail? Yes, send me a picture. Hey, did you get this email about the investigation being complete? Yes, forward it to me. Hey, did you go to the bank and set up your online banking so we could do bill pay and set you up on automatic payment because you have multiple late payments and we need to set up your online bill pay so we can do automatic payments through your bill pay? Did you set it up yet? No. When are you going to do it? Next Thursday. Next Thursday comes. Fine. Did you set up the online banking? I don't need to baby you, but I do. And I do this as your coach because I'm your accountability partner. And I'm gonna tell you what you don't want to hear. So when you graduate my program, I give you a certificate from the School of Hard Knocks. Because I'm not here to tell you what you want to hear. Let alone if the realtor or the loan officer, they're gonna kill you with kindness, I'm not. I'm gonna show you tough love, but in a kind way. Because I lead with education. My first 3 questions, when you do a budget plan, do you do a mental budget, paper budget, or you just kind of pay as you go? That gives me an idea if you're managing your debt. If you don't even know what you're spending your money on, how are you even gonna save? You can't save. And then if you're using cash, debit, and credit, or cash and debit versus credit, if you're using cash in your pocket, if I have cash in my pocket, I'm gonna use it. Right? If you have cash, more times you're gonna use it. But if I have my credit card, I'm less reluctant. I don't know why, it's just something about the card and cash. If I see the cash, I'm like, I don't want to use it all. But then I use it. It's a mindset thing. So when I come to negotiate credit, I need them to know that if I'm negotiating this for you, 6 months from now or during this program, you cannot go back to this. If you pay late one time with me, you forfeit your results. If you continue to keep a high balance when you're with me, you forfeit your results. And if you tell me, Anthony, I didn't see my credit score change all 6 months, what did you do? Wait, what did you do? You ran your credit without telling me or asking me or talking to me. You continue to keep high balances and you paid late ones. What do you, I'm a magic man. They call me Mr. Remedy, but I'm not a miracle worker. Only my higher power is. So I understand that. So when I'm doing debt negotiation, and let's say there's a collection account, portfolio recovery, and it's $10,000. That's the only collection on file. The underwriter says, get the collection off and we can get you a rapid rescore and we'll get you approved. But we send out a dispute letter and it comes back as valid. What do we do then? No, it's a collection account. It's on your report. It seems permanently for 7 years. It's been there for 4 already. But you sent out a letter, you want to buy a home, the account is valid, they have everything. What do you do then? What do you guys think? What is the possibility of doing now? You've challenged it, you've disputed it, the collection isn't getting off. That's their only derogatory remark, that the underwriter needs you to get that account removed. What do you do? What I do is I would offer an account amount to liquidate it, to do a pay for deletion. And I would negotiate that. And I would negotiate them if that we were to accept this, you're going to remove it from the credit report. And if you don't, I'm going to continue to dispute it. And in fact, I'll probably go to the Consumer Financial Protection Bureau, because if I'm disputing it and I find a reason, sending a dispute letter to the credit reporting agencies is one level. Sending a dispute complaint to the Consumer Financial Protection Bureau is another. And I don't mind going that far, putting a complaint on the company. So there's ways on how you can do debt negotiation, okay? And there's methods to follow, like not paying them directly, requesting information, all right? Now, benefit of filing your taxes as a 1099, right? I think that for those that are agents that are here, you should not be using your social security number when you're filing your taxes. You should get a tax ID number from SBA or the IRS, get one in replace of your social. And in fact, if you're allowed to have an LLC, for those that have real estate investment, I highly recommend not to have your real estate investment or your home in your name and put it under an LLC for liability reasons. So if you are receiving, right, your 1099, you can start to establish business credit. Now I can say Anthony Rosa real estate or Anthony Rosa finance coach in my bank, and I open up a business bank account. So realtors if you are using your personal checking account mixed with your business, you're already shooting yourself in the foot. Separated, shouldn't be together. You have your business checking account, you have your personal checking account, separate, it must be, it should be. And then on top of that, open up a saving account in your business and a saving account in your personal. Why? Tax purposes. Every time you make money over here, put 20% for taxes, each transaction. That's how you should put that into your saving account. And then on the personal side, you should be saving and having multiple savings accounts. I have an emergency saving account with $1,000, period. Emergency, never touch. I have my vacation saving account. I have my kids saving account. I have multiple saving accounts. I have different savings reasons. And then I have a saving account for overdraft. You know, I overdraft not because I didn't have the money, it's because maybe I paid too many accounts and it went over the weekend. And I believe in a zeroed out budget plan. I do not want to leave $1 in my checking account. I want to use my credit card for everything. So let's say if I did miscalculation, I'm like, oh my God, I got to transfer over because I transferred everything to my savings. And then I use my credit card for everything. If I make $10,000 in a deal and I paid all my expenses $5,000 and I have $5,000 left over, I'm going to take that full $5,000, I'm going to put it into my saving account. And I'm going to leave a zeroed out budget in my checking account. I don't want anything in my checking account, ever. I want it in my savings. I want to use my credit cards for everything at the point of sale. And then at the end of the month, I'm going to pay in full. And because as a business owner, we don't have the same glass ceiling as a W-2. If I make $20,000 this month and my break even is $5,000, my break even is a total amount of expenses. I just paid myself this month for 4 months. And if I do my budget plan the right way with my luxuries and my necessities in that $5,000, then this $20,000 month is going to do me for 4 months. And then next month, if I do another $20,000, I'm going to do another 4 months. Now I'm in April, but I'm working towards September. How cool is that? So many people think about having a paycheck to paycheck mentality. I don't think we can have a paycheck to paycheck mentality. I know I don't. Right? I look at being self-employed a little bit different. Take out your calendars. I'll show you something. I do business credit coaching. And I want you to take out your calendar. If you notice, did anybody make money on Saturday? Anybody make money, deposit a check Saturday? If you notice, right, Saturday is in the top of the week, right? It's only one day. But I look at that as a full week. Because if I could perform and I can generate revenue in that one day, it's going to go towards my break even. So if my break even is $5,000 and I make $1,000 on that Saturday, the remaining balance of my break even is $4,000. But take a look. Normally, traditionally, we think that there's 4 weeks in a month. Not for me. I think of 5 and 6 weeks. Why? Because I work 7 days a week. So if I see that I can make some money on that first, and let's say if my break even is 5,000 and I break it on 6, that's less than $1,000 a week. But if I made $1,000 in that one day, then I already hit my weekly break even. You understand? So I look at my expenses and I look at the weeks and I break down my expenses by my week. You know, and then I look here, look, you got 1 and then the 8th and then the 15th and then the 22nd and then the 29th. And then that Sunday, the 30th, again, if I can generate revenue on that last day, or if I put in an offer and it gets approved and I know I'm going to make money, then I have projected income. If in my projected income as an accountant, you have an accrued budget, then you have an actual budget. In my accrued budget, I'm projecting that on that first, because we put an offer and it was accepted, I'll probably get paid on it in 45 days. But just today, I made $8,000. Next week, boom, projected, boom, projected. If I have projected income and I have money coming in and I have a credit card strategy and I know that, oh, look, next month, I'm going to make like 30 grand. Wow, it's going to be a good month. But my break even is only 5,000. I just paid myself for 6 months. So don't go crazy, don't go splurging, you know, like you have to have these goals in mind. So we're talking about the benefit of filing your taxes as a 1099. I don't think of myself as a regular W-2. I don't get paid bi-weekly. I don't get paid once a month. I get multiple. And so if you guys are in that same, you have multiple transactions, you get paid multiple times, then you should let your bills build your credit. So if you have your business separate from your personal, then what you're able to do is you can eligible for gas cards. You get eligible for higher limit business credit cards. You get access to business lines of credit, business loans, SBA, you name it. So when the time does come and you want to start getting into investing and you want to take out a loan or you want to put a down payment, hey, guess what? I have a $20,000 business line of credit that if I take $20,000 from my business line of credit, it doesn't impact my personal debt to income. So it's not going to impact my personal credit score. So let me open up multiple business lines of credits and credit cards so I can leverage this for my investments. And with that, guys, I think we're kind of rounding third base on time. I think that, this hour kind of went. I can, as a finance coach, it's a passion project. We mixed a little bit about personal and business, and we talked a little bit about how you can hurt yourself. So I do feel like you're encouraged, and maybe if we had a couple questions, but before I do go, I always like to do this. I ask for grows and glows. A grow is something you feel like you grew from today. A glow, G-L-O-W, is a light bulb aha moment. Something, if anything, that made you go, wow. Me as a coach, as I'm doing these sessions, sometimes I'm sharpening iron. Sometimes you may have some experience in this. Sometimes I may say something that you never even knew. So these grows and glows help me understand that you had some takeaways. So maybe we could do individual grows and glows. I don't mind. Starting with you. So did you have any takeaways on today's call?
Yes, for sure. So the first one was, like your due date versus your cycle end date. I will pay by the due date, but I never even consider the cycle end date. So I probably do spend again in within that time period, which I can really work on. And then the glow was just the business credit. Like, I do have a separate business account, but it was attached to the social, so that's probably gonna be the first thing that I'm just getting that. Like transitioning it off my social security number to get it.
Wow, that's awesome. So you had some good takeaways. Right.
That's a good question. So you said you have checking a personal account, you're saving personal account, and also you have checking business and saving business. I use the credit card for everything. How?
So my income comes to my checking account, right? When I pay bills, there's certain bills that I can't pay with my credit card. So at my point of sale, I'm making my credit card at the point of sale, gas, groceries, eating out, shopping, et cetera, et cetera. So I'll use my credit card. With money coming in, I'm budgeting what I have to pay towards my credit card. So if I have $1,300 in my checking account, I know that those $1,300 are going towards bills. So I have a zeroed out budget plan because the only thing that I'm leaving in my checking account is what I have to pay my bills. Everything else, I'm moving to my saving. And I zero it out.
But they have a minimum sometimes checking accounts, don't have a minimum, it's not pay, to not pay the fees. Like a minimum to, let's say, $1,500 just to be able to.
Well, it depends on who you bank with. M&T Bank has really good offers. Wells Fargo has really great offers. It depends on who you bank with. It depends on what type of account you have. You could waive those monthly service fees sometimes by just setting up an automatic transfer from a checking account to a saving account. You just have to learn the stipulations that meet the requirements to waive the monthly service fee. That sounded really good, but that was all bank terminology. That was all bank terminology.
If you're getting your direct deposit, like you could set up direct deposit with us. If you're setting them with their bank, then they'll waive them. I know for cheese.
Any pros or glows or takeaways? What did you learn today?
Yeah.
So that I didn't know about the high balance, I didn't know that you're not supposed to keep the high balance. And about the cycle closing date, I had no idea about that, and about employment, because I don't have my employment on my, banking apps. Auto pay, I don't have auto pay, never had, it's a kind of like see my statement, but at the same time, they kind of make me, like scared, what about if I miss 1 month, which didn't happen because I just missed the date. And about my below, I would say I just need to be more attentive and maybe budget, that figure out things like you said about the checking account, figure out business and personal. But now I'm actually mix everything, which is not good.
So my presentations and interactions when I share is based off of the interactions that I've learned from them. So if you feel that there's a connection, it's because you're not the only one. You're not the only one. Thank you so much for your involvement and questions. Ryan, any takeaways, any grows or glows today?
Yeah, so I'm actually not a realtor, I work for Carnegie, the title.
Oh, cool.
So a lot of it didn't apply to me just because it's, I'm gonna be handling the title orders, but. What was new is I didn't know a mispayment stayed on your credit report for 7 years. That was new, and then the collection side of things. Was new to me, I actually come from a healthcare company, so. When I was living with patients, I had bills, they would go to a collection agency if they didn't pay it. But I kind of just was like, it would go to collections, I didn't really know anything about that entire process, I was never. Told anything about it, just mainly because I didn't get commission and went to collection, so I tried to get the payment prior.
Yeah.
But it's all, in general, it's all just really good stuff to know.
Yeah, for sure. I'm gonna do a selfie with you guys real quick, so if you guys wanna just say cheese. All right, we got everybody in there, 1, 2. All right, and then if you can take out your phones and go to Instagram, you can follow me. You can look up the community finance coach. The community finance coach.
Where are you based?
I'm in Hazard Heights.
Thank you so much, Anthony, for guiding us through all of your expertise. It's greatly appreciated. Thank you.
Yeah, absolutely. If anybody has any questions in the chat, feel free to read them out, or you could put my contact information in there. And then, my gift to you is I wanted you to go to your app store, download Experian, and let's set up a call one-on-one so that we can talk a little bit about where your personal and business credit goals are. So you could download the Experian app, it's free. Especially if for those that haven't seen a credit report or what it looks like. And so I'll stick around if you guys have any questions, but at the moment, I think that the session would be complete. So thank you so much, and give yourself a round of applause. I wish this counted as a CE credit, I know that they're good, but they don't, so.
I do have a question.
Yeah.
So I know you said that like disputing is not as similar. Oh, that's also something I learned. I thought that it's just what you do because so many people, especially like, I don't know if you see like the TikTok finance people, but that's all they talk about.
Yeah.
So during like one of the mortgage,